Good morning to everyone and thank you for choosing Market Briefing, analysis of today's financial news. Each day, our goal is to provide you with a deep and expert analysis of the most relevant financial news to help you navigate the complex economic landscape. We're pleased to deliver our content every morning, prior to the opening of the U.S. markets, offering you a competitive edge for your trading day. Now, let's begin our daily review. Major developments in international finance, June 2, 2023. Top international financial and market news. U.S. session. In the U.S. session, the USD experienced mixed effects from recent employment data releases. While average hourly earnings matched forecasts at 0.3%, it fell from the previous 0.4%, indicating slower wage growth. On the other hand, non-farm employment change significantly beat expectations, with 339K jobs added compared to a forecasted 193K and a previous 294K, suggesting a solid labor market. However, the unemployment rate rose to 3.7% against a forecasted 3.5% and a previous 3.4%, signaling potential weakness in the job market. Asia session. Moving on to the Asia session, the AUD faces potential volatility due to mixed economic data. The ME inflation gauge showed a surprising increase to 0.9% against a forecasted 0.2%, potentially pressuring the Reserve Bank of Australia towards rate hikes. However, the ANZ job advertisements rose slightly to 0.1%, indicating a slow job market recovery. Additionally, the company's operating profits fell short of expectations, at 0.5% versus a forecasted 2.1%, suggesting weaker business conditions. On a positive note, the Caixin Services PMI for the closely linked CNY came in at 57.1, exceeding the forecast of 55.2, indicating China's service sector is expanding faster than anticipated, which could positively impact the AUD. Europe and US sessions. Looking ahead to the Europe and US sessions, the DXY is likely to be in a consolidative mood between 103.50 and 104.40 before the release of the ISM Services PMI data. Similarly, the US dollar to Swiss franc is expected to range from 0.9040 to 0.9140. The upcoming release of the ISM Services PMI data, with a forecasted value of 52.6, is expected to have a moderate impact on the currency market. If the actual data matches or exceeds the forecast, indicating expansion in the sector, it may boost investor confidence and strengthen the currency. Moving on to other currencies, the Australian dollar, AUD, is anticipated to be influenced by the upcoming Australian data releases, including the ME inflation gauge and ANZ job advertisements. Higher inflation could strengthen the AUD due to potential rate hike expectations, while increasing job ads may boost the AUD, reflecting improved business confidence. Additionally, the upcoming company operating profits data release could indicate a robust corporate sector, potentially boosting the AUD. The New Zealand dollar, NZD, is expected to face downward pressure due to reduced demand for exported commodities, as indicated by the ANZ commodity prices and the GDT price index. Before we continue with our analysis, we'd like to remind you of your support for our channel Market Briefing, analysis of today's financial news. If you're enjoying this video and find our content useful and engaging, please consider giving it a thumbs up and subscribing to our channel. This helps us grow and bring you even more quality content. Now, let's get back to the financial market news and the latest updates. The Japanese yen, JPY, is likely to be influenced by forthcoming data such as average cash earnings and household spending. Positive readings in average cash earnings may boost the yen, while continued negative trends in household spending could weigh on the currency. The outcome of the 30-year bond auction will also be crucial in gauging investor confidence. For the euro, EUR, data releases such as Final Services PMI, Centix investor confidence, and PPI will impact the currency. Lower investor confidence and a deeper contraction in producer prices could weaken the euro. Traders will also closely monitor the statements by ECB President Lagarde for any indications of monetary policy changes. The Swiss franc, CHF, is likely to be influenced by the upcoming Swiss CPI data. Higher than expected CPI figures could strengthen the CHF, indicating rising inflation and potential tightening of monetary policy. The pound, GBP, may be impacted by the release of final services PMI data. Positive data could boost confidence in the GBP, while falling short of expectations might lead to a decline in demand for the currency. The Canadian dollar, CAD, is expected to be influenced by building permits and the IVPMI data. Higher than expected results could boost the CAD, while lower results may weaken the currency. Finally, the OPEC Plus group of oil-producing countries has agreed to extend output cuts by 1.4 million barrels per day into the following year, aiming to stabilize oil prices and prevent potential oversupply. Dow surges over 2% after jobs data. U.S. stock markets experienced a significant surge on Friday following the release of the latest jobs data. Despite the unemployment rate rising to its highest level in 7 months, the Dow led the way, closing up 2.12% on the day. The S&P and Nasdaq also saw gains, finishing the day up 1.45% and 1.07% respectively. The unexpected increase in the unemployment rate came alongside a strong non-farms print, with 339,000 jobs added to the U.S. economy, surpassing the expected 193,000. This mixed data led to varied reactions in the market, with the dollar and U.S. Treasury yields experiencing strong reactions, and safe haven gold dropping near weekly lows. Meanwhile, oil prices jumped over 2% ahead of the weekend's OPEC meeting. Confusion reigns after mixed U.S. data. The release of the non-farm employment data on Friday left investors in a state of confusion. While the headline numbers showed stronger than expected job growth, indicating continued strength in the U.S. job market, the unemployment rate came in higher than anticipated. This conflicting data sets have led to multiple explanations for the subsequent market moves. Stock markets rallied, and both the dollar and U.S. yields saw gains. However, this mix of data adds to the complexity that Federal Reserve members will have to navigate when deciding whether to raise rates or pause. The decision between raising rates or stopping has taken a more hawkish turn in recent weeks. As a result, traders can expect more confusion and volatility in the short term. The week starts on a positive note. Asian stock markets are expected to follow the lead of Wall Street, with major U.S. indices rallying on Friday. With little macroeconomic news on the calendar, the sentiment remains risk-positive for now. In the European sector, the focus will temporarily shift to Switzerland with the release of the latest CPI data. Expectations point to a 0.3% month-on-month increase. In the New York session, the U.S. ISM Service PMI number will be released, with a forecasted level of around 52.6. In conclusion, we'd like to thank you for watching Market Briefing, analysis of today's financial news. If you enjoyed our insights and found the information helpful, please consider leaving a like and subscribing to our channel to stay updated with future analyses. Thank you again for your support, and we'll see you soon with more fascinating news. Remember, the information in this video is purely informational and does not constitute investment advice. Always consult with a professional before making financial decisions.